The February 16, 2024 amendment to a class action lawsuit claims the Bahamian-based Deltec Bank and Trust Company Limited, or Deltec Bank, provided a secret line of credit to Alameda Research totaling $1.8 billion used by FTX fraudster Sam Bankman-Fried that allowed him to buy the Tether stablecoin, and details Deltec Bank's relationship with Tether, FTX, and Alameda Research, the Bloomberg report reveals. The lawsuit states that the chairman of Deltec Bank, John Chalopin, and Deputy CEO Gregory Pepin played a key role in FTX's money laundering. The amendment to a class action lawsuit, originally brought on June 6, 2023, was filed on February 16, 2024 in the United States District Court of the Southern District of Florida. It is based on 7,000 pages of direct text messages that were offered up in discovery provided by Alameda Research's CEO, Ellison. According to the lawsuit's unsealed documents in federal court, victims were fraudulently induced to transfer money into shell companies, at which point the money underwent a series of transfers, generally ending overseas, designed to conceal the source, nature, ownership, and control of the funds. Defendant Deltec Bank is an offshore bank licensed and operating in the Bahamas. Deltec Bank is one of the few banks in the world that offers a full suite of digital asset services, including multi-currency banking, digital asset custody, trading, market making, lending, and borrowing. Deltec Bank is a subsidiary of Deltec International Group, which also owns Delchain Limited, a digital asset financial services provider whose services include multi-currency banking, digital asset custody, and multi-asset trading. Deltec Bank and Delchain Limited share affiliation with Realm Insurance Limited. Realm Insurance is one of the few providers offering insurance in the crypto space. Deltec International Group launched Realm Insurance in March 2020 and owned the captive insurer at least through December 2022. Carolyn Ellison's discovery session suggested that Deltec Bank CEO John Chalopin launched Realm Insurance to provide coverage to and gloss over the reputation of FTX despite knowing of FTX's misconduct, and proposed that Alameda Research enter into an insurance scheme with Deltec International Group to exploit profit from covering FTX customer deposits. The February 16, 2024 lawsuit documents verified by Bloomberg allege Sam Bankman-Fried's hedge fund, Alameda Research, artificially inflated the growth of the cryptocurrency Tether using a secret short-term line of credit worth $1.8 billion from the Bahamian-based bank Deltec Bank. According to Bloomberg, former CEO of Alameda Research and the ex-girlfriend of Sam Bankman-Fried, Carolyn Ellison, that cooperated with the FTX investigation, turned over 7,000 pages of Telegram text messages between Deltec Bank and Alameda Research and FTX employees regarding detailing transfers of FTX customer funds to Alameda Research's deposit accounts and FTX's purchase of the Tether stablecoin. The amended lawsuit also alleges that Deltec Bank and its chairman, John Chalopin, was instrumental in crafting the Bahama Digital Assets and Registered Exchanges Bill in 2020, also called the DARE Bill, which facilitates the registration of digital token exchanges in the Bahamas. Sam Bankman-Fried's FTX empire came crashing down in November 2022 when it was revealed that $8.9 billion was missing from its customers' accounts. The amended lawsuit also lists the various defendants in the case: Gary Wang, Nishad Singh, Carolyn Ellison, Ryan Salami, and others. Deltec Bank provided banking services to FTX Trading, FTX US, and Alameda Research. Deltec Bank's deputy CEO, Gregory Pepin, manually allocated incoming customer funds to FTX accounts and then moved the funds to Alameda Research. Deltec Bank's chairman, John Chalopin, bought a Washington-based bank called Farmington Bank in 2020 in a deal with FTX, turning a tiny local bank into a cryptocurrency service company, mostly for FTX and Alameda Research. The bank was later renamed Moonstone Bank. Moonstone Bank joined the Federal Reserve without notifying the Federal Reserve of its change of business plan from a local farmers bank to a cryptocurrency bank. The Federal Reserve shut down Moonstone Bank in August 2023. The amended lawsuit alleges Moonstone Bank's willingness to engage in wrongful conduct in order to assist the FTX fraud. North Dimension Incorporated was a fake electronics company that FTX and Alameda Research created so they could set up accounts at Silvergate Bank and Signature Bank in its name. FTX had customers wire money to North Dimension, Silvergate, and Signature accounts so that it would go directly to Alameda Research. This was part of the money laundering charge that Bankman-Fried was convicted on. Deltec Bank's deputy CEO, Gregory Pepin, made sure the deposits from North Dimension Incorporated came through to Deltec Bank and were sent to FTX or Alameda Research as needed. When Tether became a Deltec Bank customer in November 2018, it deposited about $1.8 billion, making up nearly half of Deltec Bank's total deposits at that time. Alameda Research was the second largest creator of the Tether stablecoin USDT, with about 1/3 of USDT minted went to Alameda Research. The USDT was funded with FTX custom deposits, which Deltec Bank routed to Alameda Research. In total, Alameda Research minted more than $40 billion of USDT through this scheme, encompassing nearly half of USDT in circulation at that time. Carolyn Ellison's discovery session with law enforcement and Miss Ellison's production of nearly 7,000 pages of Telegram messages show that Deltec manually effected transfers of customer funds into and out of Alameda Research's Deltec Bank deposit accounts, including North Dimension Incorporated, which Deltec Bank knew was a sham company. The Telegram messages also revealed secret transactions between Alameda Research and Tether to artificially inflate the market price of certain stable coins, and transferred hundreds of millions of dollars from FTX's Deltec Bank deposit accounts to Alameda Research, even after learning of Alameda Research's insolvency. The lawsuit illustrates John Chalopin's intimate involvement in the Deltec Bank, FTX, Alameda Research banking relationship and knowledge of the FTX fraud. Breaking.
Southern District of New York Judge Louis Kaplan sentenced the disgraced FTX executive to 25 years in prison out of a maximum 110 years for the massive fraud and conspiracy that led to the collapse of FTX.